Boom, boom. Admit. Being live streamed. Okay, so first things first, we've got to say, being as we are live, and it is Monday the 2nd, is Eid Mubarak to all of our Muslim friends and family. Have a good time with friends and family. Make sure you enjoy that special moment and embrace gratitude for the fact that you have people and love in your lives. All of us have love in our lives, regardless of how much you think you may not have love in your life. You have love in your life because from some degree, in some shape, way, or form, the only reason you exist is because of love. So keep that in mind, guys. Just thought I'd start off with that one and set that tone of gratitude, because it's gonna get pretty dark in here, mate. It's gonna get pretty dark in here. Let me tell you that. It's gonna get pretty grim when we're going through this one. So as you may know, we're going over the Ray Dalio, the Changing World Orders book. Now, I've been going on about this book for over 2 years now, and everything that Ray Dalio said would happen has been happening. We were lucky. If you didn't know, actually, let's do the disclaimer first. Ninja, do you want a disclaimer or shall I do it?
I got it. All right, let me just do this. Do you want to make me co-host?
I do want to make you co-host. Boom.
I'm currently in the car right now, but shouts good old YouTube for sorting me out because
You got it, yeah? Or I can do it from my screen.
Literally just went to a print screen, not print screen, but oh wait, no, oh, still there. Okay, amazing. All right, let's go. Sorry? Everything good, yeah?
Yeah, everything's all good. The disclaimer's on the website, you know, bro.
Hello. I'm still here. Oh my God. Am I still in the Zoom?
You are. Right, I'll make it easy for him and I'll put it on.
Hello.
Yeah, you are.
Can you
are
hear
in
me?
the cyber trap, bro. So I'll read it. We've lost into the cyber trap.
So driving is very cyber trap.
Yeah, it's all good, bro. So all content is for education, information, and entertainment purposes only and should not be considered as investment advice or recommendation. Buy, sell, hold any assets, or place any trades. Please do your own research. Our content is intended and should only be used for informational use. We are financial edutainers, not financial educators, because we don't have any degrees in finance. We don't have any of the fancy certificates that say that we know what we're talking about. It is very important to do your own analysis before making any investment, which should be based on your own individual circumstances, not based on what we say to you or how we are feeling about things. Because, look, we get things right sometimes, but sometimes we get things wrong, even when the information comes from the horse's mouth. I'm not going to say what investment that was recently that's gone down recently, but we had some information from the horse's mouth about something that was meant to happen, and it didn't happen. So, look, it's what it is. You have to be able to always take independent professional advice from a professional advisor, or independently research and verify all information you may find on our show that you wish to rely upon, whether you wish to make an investment decision or otherwise. That bit of the disclaimer, I don't get, but you know, we gotta say it. All investments come with risk. Please do your own research. We are not financial advisors. We do not intend to be perceived or received as financial advisors because we are not. However, we are working in collaboration with several accredited advisors. Shout out Victoria Navarro and the guys from Civitas. If you are unable to mitigate your risk, then please contact us immediately so we can refer you to a accredited financial advisor. So first things first, let's do the news. The news is. So first bit of news.
What's happening?
What's happening in space? What's happening in the game? Well, first bit of news, we've got to shout out our fellow NFT artists. Shout out Storm. who's the head of NFTs at Blockchain Sensei, and Otter Space, and Mr. You Know the Vibes. If you know who You Know the Vibes is, just dropped you some information there. Then we have Shay Teal as well. Check out her amazing augmented reality work. But Super Rare have created an NFT gallery space in New York City. So what I would really appreciate is if you could like and comment on this post and tag Super Rare and say, please do a space in London with Blockchain Sensei. That'd be appreciated. Thank you very much, guys. Also,
Yes,
those of
please.
you watching on YouTube, please like and subscribe. So next bit of news is man like Jacob the Jeweler. You know, I don't know if any of you were old enough to play Def Jam Vendetta Fight for New York when you got to finally get your hand on a Jacob. You got to fight with Jacob. Yo, that was my times. But anyway, Jacob is like the king of luxury watches in New York, and he now has an NFT collection that also gives you the watch to match. Now that is utility. Time keeps on getting more expensive, but I guess it's just a luxury. I got bars, you know. I'm starting to see it now, you know, bro. I'm starting to see it now. I am the neighborhood dope dealer. So Leonardo da Vinci's historic creations are now transformed into NFTs. So this is one to watch. I would highly recommend watching this platform and doing your own research on this, just like recommending doing your own research on the current Louis Vuitton game, which Dom is playing, which is how many candles you got so far? She's not even listening to me. She's got her headphones plugged in, but hey. The beta version of Coinbase's NFT marketplace hits 100K USD in daily sales with fewer than 700 users on the closed platform. Now, what's really interesting about this post is different articles are spinning this completely different. Some people are spinning it as, Coinbase NFTs flopped. And it's like, they've only let 700 people on the platform and they're doing 100K in daily sales from 700 people. That's crazy. That's insane, considering they have a wait list of over 2 million people and they're doing 100K from 700 users. And people are trying to spin that as bad. I'm like, what? So just watch out for that one. That one's interesting.
Devon just said that he's 1 out of the 700.
Oh, snap, really?
Yeah, they invited me to get onto the platform, so I made an account.
Oh, jeez. Congratulations, bro. One of 700 people out of 2 million. That is like the chances of us even knowing someone out of those the 200 is crazy. But yo, mad levels. Next is Apple beats its expectations in Q2 with 97 billion in USD revenue, with the wearables increasing by 3 billion alone in one quarter, guys. Like, I'm bored of tooting this trumpet about Apple. I'm not going to toot it anymore. Like, they're just goated. They have the largest market cap in the world of a public company, like, apart from Saudi Aramco, but that's a whole different story. We won't get into that. Next, McLaren enters the metaverse with the MSO Lab NFT announcement. Again, watch out for this one. Do your own research. Now, this is where it gets a bit funny. Goldman Sachs is now offered its first Bitcoin-backed loan. So that's Goldman doing Bitcoin DeFi loans. That is pretty mad.
Just on top of that, it's technically CFI though, right?
Yeah. It is. Yeah. Yeah.
That's like definitely not decentralized if it's Goldman Sachs.
Yeah, it's definitely not at all. We did an amazing episode the other day with a man like Debs from Stock Pickers Academy, former Goldman Sachs trader who managed over several billion. That episode is going to be coming to Wealth Masters very soon. Other episodes of Wealth Masters include Ian Dunlap and Ray Dalio. So shout out to Ray Dalio, Ian Dunlap, and man like Debs. Only the finest we interview, only the finest. Next, CoinMarketCap says XRP is controlled and governed by the authorities and defeats the purpose of cryptocurrency in a recent tweet. I thought this was obvious. I thought everybody knew this. Like, that just, if people are shocked by this, then it means they haven't done their research on what XRP is. XRP is designed to allow big banks and corporations to move money. It was never intended for the people. It was never designed for the people, and it never will be for the people, even though the people use it. I use it. I love using it. It's great. It's fast. It's cheap and it's easy. But people that want this to get to like $100 don't understand what they're doing and wanting and praying for. If this thing gets to $100, the impact this will have, because the market cap then of Ripple would be then like, would be like 5 trillion. Then that's a problem. That would be, we've just started the whole centralized system all over again if that happens. So I'm okay with it getting to like, I don't know, $10. That's cool. And replacing Ethereum as the number 2, which I think will be likely. Why? Because history doesn't repeat itself. It rhymes, which is exactly what today's episode is all about. So hang on for that. Then we've got ARK Invest. Oh, yeah. The other thing that's happened recently with the Goldman thing is there's now Bitcoin-backed mortgages are being offered by a certain bank. I'll let you go and do your research on that one. Also, ARK Invest tweeted that the number of digital wallets has now surpassed the number of deposits accounts on JP Morgan. I thought that was quite ironic because JP Morgan have a controlling stake in Consensus, who create MetaMask, who have the majority of decentralized wallets. So it's not technically centralized wallets. So I just thought that was quite ironic. So yeah, don't know if anyone else finds that ironic, but it is what it is. So let's get into today's episode. So in fact, before I do that, I just want to show you a bit of TA that I posted the other day, because I think it's quite relevant. Blockchain Sensei Twitter. Blockchain Sen. Let me just read some of these. Afcam, I'm one of is it 700? I thought it was 200. Collections are all right. 555. Would you guys interview Wall Street Trapper one day? Of course we would. If Wall Street Trapper recognizes us and is willing to sit with us, we are most definitely willing to do an episode with Wall Street Trapper. That's a no-brainer. So if anyone knows Wall Street Trapper, and if Wall Street Trapper's watching, well, if he's friends with Ian and Ian's watching, then there is a possibility that Wall Street Trapper's watching. We'd love to do an episode.
Because look, I literally posted this recently, and look who commented. Wall Street Trapper commented on my post.
Oh,
that only got 17 likes. That's why Gary's saying. I got 17 likes, but one of them
not with.
And a comment.
It's what it is. It's what it is. And whipping it up with the Pyrex, how do I go back to share my screen now? Yeah, here we go. So this is something that I tweeted out the other day. This might not come to fruition, but the day that I tweeted it out, on the hourly candle, it did start moving down. So this is just an example of what happens with the US dollar currency index. What that is basically a basket of currencies basically together to kind of balance the dollar out, pretty much. That's the best way of explaining it. But we can see whenever it seems to get to this 102.95 area, what happens in 2017? Well, it came down, and what happened then? Oh, someone's a bit loud. Let me just mute Ninja. Sorry, bro. Then in 2021, what happened? It happened again. What did we have? Crypto bull run. Then it happened again recently. Let's see what happens. Now, judging by the RSI, if anyone understands how to use the RSI, I don't know. You tell me. Is that a high RSI? Over 75? Just saying. Let's go to the other one. And at the same time, we also had this. The Euro USD dollar also did this. And if you look at how low the RSI was here, and if we look at this area here, what tends to happen when the price gets here? Oh yeah, we get a bit of a bounce up. And it's below the 200 moving average. And the RSI is down. So what do we think happened here? Oh, we'll go and have a look at the end of today's episode. Oh, people are cutting out already. That's a shame. Oh well. So let's get into the juice. Let me get into it. So if you don't know who Ray Dalio is, he's one of the greatest investors of all time. He runs a hedge fund called Bridgewater. Let's show you where you can get hold of the interview that we did with Blockchain Sensei. Well, we did with Ray Dalio. Shout out Tortoise Media for making that happen. Shout out man like Mo as well for making that happen. Here you go. All you got to do is click on this. And you'll hear us talking to Ray Dalio there. Just for a bit of context, does this guy know what he's talking about? Yeah. And now this is where it's scary. There are people that work in finance that don't know who Ray Dalio is. That should worry you.
There's people in finance that don't know what the Nasdaq is.
That is also true.
Which is more famous, the Nasdaq or Ray Dalio? I know they're incomparable things, but just around.
Well, Ray Dalio's got a TikTok, ain't he?
Okay.
So he's doing bits on TikTok. Let's show people how his latest. This is Wikipedia. Obviously, don't always rely on Wikipedia for information. I don't know why I even went to Wikipedia. That was so bad. Let me just come off that. But yeah, so his hedge fund's worth a few trillion. So yeah, he's doing crazy bits. So what was I going to show you? Oh yeah, YouTube. So when we go to YouTube, if you like what we're going to discuss today, yeah, I don't normally get put off by people leaving, but people should not be leaving this one. This is the Principles for Dealing with the Changing World Order. It's a book that I got to read in advance. I was reading it in lockdown. It's just come out recently.
Oh, no.
This year. And yeah, you can watch it here. It's got 11 million views. Everyone in finance is talking about it. Please go and watch it. It will literally potentially save you and potentially make you millions. But, you know, if it's not for you, it's not for you. Anyway, so let's get into it. My observations from reading the book fully. So what have we got? So things. So this is I'm just gonna break it down, the context of this book in a really, really simple way. So the first thing that happens is that we don't understand and often happen things that are happening in life because they're outside of our experience in our lifetime.
Define.
Oh, let me just. There you go. What's up, Roger? Long time. So this is Ray Dalio's quote, that if you don't understand something that's happening in the world at the moment, it's probably because it happened outside your lifetime. Now, what's happened is we're going through a bit of a change in the world. Everyone can see it, feel it at the moment. And the last changes that happened that was similar to this was from the Dutch Empire, which reigned in 1625 to 1780, and they had something called the Dutch Guilder, and they had a massive trading company called the East India Company. So this was like the equivalent of Amazon back then. And just imagine Amazon basically taking over and starting their own country. That's pretty much what the East India Company did. And they had the Fourth Anglo-Dutch War. And this is when Amsterdam was the center of all finance. Then during that war, cost them a bit of money. They had to take out loans and get into loads of debt to finance that war. And that's when the British came into power with the British Empire from 1815 to around 1939. The reserve currency was the pound, and that was based, the central finance was based in London. And then they had World War I and World War II. And then that's when America became the world power till now. And the reserve currency was the dollar. And we haven't had a war as of yet, from what people know and understand. But let's carry on. Let's go to the next slide. Okay, so what is the main thing that caused this disruption in each one of these changes? The main thing that causes these changes in the world power is innovation. So innovation causes a massive change in world powers because it causes an increase in wealth. It causes an increase in a distribution of wealth that is unrivaled. So right now, what are the innovations that we're about to go through? The World Economic Forum is suggesting that we're going through the fourth industrial revolution. And that is the 4 emerging technologies. That is AI, automation, and blockchain technologies. Now, what's happening is these technologies are actually converging, which means working together. Now, the last time we had something like this was
just to pause you. You said you said 4, but then said 3.
Oh,
AI, blockchain.
AI, blockchain, automation, and what's it called? The
biotech,
biotech,
like a Neuralink, right?
Yeah, so things like Neuralink. And what most people don't realize is that the COVID vaccines were actually created by AI. That's how they managed to get them out so fast. It's because it was a combination of
we definitely could have missed that one out.
Yeah, this is the thing people don't know. That's what the game is all about. It's giving people the game. So what happened last time is there was wars, because if you look, one of the things that I don't think people really realize is if you look at the change in technology between World War I and World War II, it was crazy. You have to bear in mind, in World War I, people were flying in wooden airplanes. And in World War II, they were flying in metal airplanes. In World War I, people had to load their guns with gunpowder. World War II, they had automatic rifles. Things changed a lot. Another thing that caused a massive disruption for the British Empire was the emergence of machinery. So the emergence of steam engines and machines in factories meant that people didn't need to use slaves anymore because slaves were inefficient. That is one of the main reasons that slavery was abolished, not because the British Empire was nice. It's just that it just wasn't cost effective to have slaves anymore. It was just totally inefficient. Why would you have 400 slaves when you could have 40 machines? Plus everyone giving you shit about having slaves. It just didn't make any sense. Yep, diversification is definitely important. I'm going to get onto the diversification of what Ray Dalio suggests. Again, this isn't my words. I'm just breaking down for you what Ray Dalio said. So unless you want to go and read the whole book, which I would recommend, but alternatively, go and watch the video. So the other thing that cost the British a lot was the American independence. So they had all these internal conflicts. Then they had the external conflict of the World War. Now, the question is, who is the next superpower to become the reserve currency? Now, the reason I put China and Africa there is because, in my opinion, it's going to be China next. And then after China, it's going to be Africa. Why do I say this? Because when you look at one of the things that causes innovation is work ethic and education. Right now, everyone knows China's work ethic and education is unrivaled. Everyone also knows that Africa, when it has the opportunity because of decentralized information and Web3, and this is the question I was asking Ray Dalio, will surpass most countries easily. Because they're also going to be the second most populated area in the world outside of China. The estimated population of the whole of Africa as a continent by 2030 is estimated to be over 2 billion. So that's a lot of people that, if they have equal access to the education that the Western world has, and access to blockchain technology and AI and automation, yeah, crazy times. And also, there's a couple of big investors I know that are building stuff out in Africa, as we've seen. Okay, cool. So next, so what causes countries to go backwards? And well, actually, first, the solution. So the solutions of what Ray Dalio, just for anybody else that leaves early, the solutions that Ray Dalio suggests is to, number one, not to have any cash. The reason he suggests not to have any cash is because you're guaranteed to have inflation. Whereas, yes, money in assets is a risk. Money in commodities is a lesser risk, but money in the bank is a guaranteed loss. Like, it's not even debatable. It's just, you're guaranteed your money is going down if it's in the bank. So next is to diversify your assets. This is what Ray Dalio suggests, is to diversify into stocks, crypto, commodities, and property, and to not just be in one thing. This is also what we teach at Blockchain Sensei. Next is to diversify into locations, mainly emerging markets. So investing in the S&P 500 is not diversification, because you're investing in just one country. You're investing in the top 500 companies in America, of which probably 80 to 90% of them are terrible companies. So yeah. So some overseas companies you might want to check out is C Limited, who produce pretty much most of the e-commerce and mobile platforms in Asia, in Indonesia, Malaysia, and Thailand. Definitely check them out. Next is SQM. They are the guys that have the world's biggest deposit of lithium available. So that's a bit of commodities and a bit of overseas investment. And then we've got Jumaya, which is getting battered at the moment, but they are basically the Amazon of Africa. Amazing earnings report, but they're getting battered at the moment. So those are my 3 personal ones. Make your own decisions, do what you want to do. Okay, cool. So catalysts that cause empires to lose everything that they've got, that I think could trigger the UK, which would then in turn drag America down with it, or vice versa. One is AI and automation, which is going to cause, estimated to be about 43% of jobs are going to be lost to AI and automation. Next is the EU pension crisis, which we covered in the last episode of the game, talking about how baby boomers, people over 50 are now going to be starting to try to claim their pension, and that money isn't actually there. So that's going to be a bit of a problem. Then I just put Boris, because Boris is Boris, and you just never know what this guy's going to do next, isn't it? You just, like, what is Boris going to, like, Dom's got this notification thing on her phone, and every time it goes off, I'm just like, oh, what's Boris done now? That's the way that I was during lockdown, and it's the way that I still am. I don't know if anybody else feels that way about Boris. The next is also the Queen, because the Queen probably isn't going to live for the next 10 years, unfortunately for her. It's very unlikely. And then that's going to mean that they're going to have to reprint all the currency, the physical currency, and this will most definitely cause the markets to take a bit of a dip. And then Web3 jobs is the other catalyst that I think could make the dominoes crumble just a little bit. So the ultimate reason for all this situation and why countries lose their power as the reserve currency is because money is fake. It's because the moment a country detaches their money from being a credit note for gold and just starts printing money when they feel like it and making up more money because they're in debt and they owe people money, they just So basically, a country ends up in a situation whereby they are spending more money than they're making. So what they do is they go, right, we're spending more money than we're making, and we can't pay anybody back. So what we'll do is we'll detach from gold, and we'll just print double the amount of money than the gold that we've got. That way, we're fine. And only if you're the reserve currency can you do that. But the problem with that is it then makes inflation go up, which then has its own set of problems, which we're seeing, which then, on top of this, makes people not trust you or your currency as much, because you just basically snaked everybody, which is pretty bad. Yeah, so money is unfortunately fake. It's not backed by anything. If you didn't know that, sorry for bursting your bubble. So next is, I thought this was anything with the quote marks is something that is a quote from Ray Dalio. Anything without the quote mark is my quote. So Ray Dalio's quote is, people given similar circumstances react in similar ways. My saying is, people are predictable and people will always do what people do best. So because of that, the future is predictable. Given the same cause and effect situations, people become obvious and repetitive. So you can kind of guess what's going to happen when the crypto markets go up. We already know what's going to happen. People are just going to do the same old shit that they always do. So, you're handling the, yeah, from what you're saying, it's important to look into diversification. Yeah, lithium is essential for electronic vehicles. In fact, Elon Musk has been quoted as saying that there currently isn't enough lithium in the world for every car company to be produced, to be all the top 5 major car manufacturers wouldn't be able to produce at the same levels that Tesla's currently producing at, because there's not enough lithium. So my theory is that Tesla and Elon Musk, now they're doing Bitcoin mining, might as well get into lithium mining as well. So how to flush your empire away? Now they're doing Bitcoin mining. I just thought I'd throw this in there because this is literally how you destroy your own empire. It's through decadence. So if you don't know what decadence is, it's just overspending on luxury items and just stuff that people don't need, and people just buying stuff rather than assets, which I'm sure we all saw people doing during lockdown, which is possibly one of the main reasons why the American empire might fall. So how to flush your empire away? Number 1, countries spending more than they're earning. Number 2, individuals having more debt than assets. So whilst people were getting their stimulus checks and whatever, most people weren't using that to clear their debt. Some people were, but not everybody. Some people were just going out there buying Louis V bags and Rolexes and stuff like that, even though they weren't earning the amount of money to pay that off. Problem. Number 3 is when wealth gaps emerge. So when the rich get richer and the poor get poorer. We've all seen that over the lockdown period, the billionaires in America most of them got at least 50% richer. So we can see that wealth gap is increasing. And when wealth gaps emerge, we then have income inequality and resentment. And when you have income inequality and resentment, you then get internal conflicts. Don't know if anybody saw any internal conflicts in America last year with the storming of the Capitol, but yeah, don't know if anybody saw any internal conflicts across the UK last year with the riots, but you know, all the signs are there. So it's funny because Ray Dalio wrote this before that happened. So when external powers see this weakness inside a country, the internal fighting, they try to take advantage of the opportunity, which I spelt wrong, by the way. I put opportunity. It's not opportunity, it's opportunity. But great quote by Ray Dalio, absolute bars. One man's debts are another man's assets. I thought that was bars, because you can buy other people's debt, which is technically what a bond is. So when people, and then my bar was, when people have more opinions than contributions and more comments than creations, this is when you can see that a country is going downhill. And I think you can definitely see that in both the UK and the USA. Type in chat, agree if you agree with that one. Okay, cool. So once you have this resentment, this is where the next phase kicks in, is you have greater polarity and more division between the rich and the poor and the haves and the have-nots. And the moderates, who are the people in the middle that try to make everybody get along, they start leaving the country or leaving the city. Now, a quote from Ray Dalio is, when the causes people believe in are behind and are behind are more important than the system, that is when the system is in jeopardy. So the moderates tend to leave, or in some cases, in certain revolutions, they're executed, like in the French Revolution, the Cuban Revolution, and the Russian Revolution. So just in case, people that are the moderates tend to leave and get out a little bit early. And this is because what happens is, with the extreme problems that start arising, people rally behind more extremes because they don't know, they don't have an answer. They don't have anyone to blame because all these things are happening to them and they're just getting angry and angry and angrier, and there's no answers. So what ends up happening is radical leaders and radical ideas come about, and then people start following them, and then they start doing this. And this is the ultimate sign: wishing death on leaders or non-followers, which is kind of what we saw in America. People wishing Donald Trump would die. Now, he's not the greatest guy, but I just wouldn't really wish someone would die. That's a bit extreme. But yeah, when that happens, we have a problem. So next is, after that, this is now where you start getting your wars. And look at what's happening in the world right now. So what causes it is overreaching by the leading power. Now, Russia and China at the moment agree that the US is indirectly overreaching when it comes to countries in their remit. So they both feel that the US indirectly through the United Nations are overreaching with what they're doing in the Ukraine and overreaching with what they're doing in Taiwan. So from what I can see, this is just my personal opinion, not Ray Dalio's personal opinion, is that the same situation that's happening in Ukraine is the exact same situation that's going to happen in Taiwan. However, the situation in Taiwan is going to be a little bit different because Taiwan has a company called Taiwan Semiconductor, and they produce the majority of chips for the majority of tech companies. Now, if China takes Taiwan Semiconductor and stops them from exporting, America and the world can't innovate and can't move forward because they need the chips. So Taiwan Semiconductor last year announced that they're going to be building a factory in the USA. So that kind of shows you that the USA are very aware that that move by China would be a big, big problem. So in terms of the wars, Ray Dalio suggests that there is several different types of wars. There is a trade war where countries issue out sanctions. And this is normally done by the country that has the reserve currency because they can issue out the sanctions. Anybody notice any sanctions floating about at the moment for the Ukraine? No, for Russia? I have plenty of them. Now, what happens when these sanctions go out is countries now start selling their bonds because they're like, why am I going to hold on to these bonds or onto this country's money if they're issuing out these sanctions? What if they sanction me? And if you want to research what happens when these sanctions get a bit extreme, look into how many people theorize Pearl Harbor happened when the sanctions that was happening to the Japanese oil supply got a little bit too much. Next is a tech war, which, I don't know, you could say that TikTok, Bitcoin maybe even, could be a cyber weapon. That's a conspiracy theory by me, though. But, you know, they are definitely having an effect on people's education, people's morale, people's mental health, people's self-esteem. And in terms of AI, the bots that are all over Facebook and Instagram and Twitter, and their ability to radicalize people is extreme. Then we have geopolitical wars, which is where countries indirectly or directly back countries that are opposed. So that's like China backing Russia. So that's the geopolitical. So it's basically co-signing countries, which is exactly what the UN does. And then next we have the capital wars, which is basically not just backing them and agreeing to still do business with them, but actually funding them and giving them weapons, which is exactly kind of what we're seeing happening again. And this is where you have a hot war, where you have an actual physical war where bullets are fired. This is called a hot war. And we can see that at the moment, the USA are technically in a hot war with Russia via proxy with Ukraine, because if they're supplying weapons to them, then technically they are. So this is where it gets interesting on the sanctions point, is American sanctions are the greatest power they have, as in a hot war, the collateral damage would be equal. So if America was to go into a hot war with Russia or with China, it would just be a bloody mess. It would just be, there's just no point. So that's why they're aware of this. Everyone's aware of this, and nobody really wants that to happen. So what's happening is we're going into the sanction beef instead. But America, without the reserve currency, wouldn't be able to do these sanctions. Now, the most important question you've got to ask yourself is, like I said about Taiwan, is can America pull off and convince all of the United Nations to do the same sanctions that they're doing to Russia to China if China invade Taiwan? That's the real question we've got to ask ourselves. In my opinion, I don't think they can. I don't think they've got the facilities for that, big man. Don't think they've got it, because they kind of need Chinese customers. Everybody needs Chinese customers. Everybody needs Chinese students. Everybody needs Chinese people to buy real estate, and everybody needs Chinese manufacturers. So if America lost this power and tried to sanction China, I think they'd laugh it off, to be honest with you. Let me just read these comments. TSM is currently down, so would it be a good buying opportunity? Isn't NVIDIA also a semiconductor company? If TSM suffered, would NVIDIA and TSM both be good long-term stocks? Not my opinion, but NVIDIA, not financial advice, but NVIDIA is one of the greatest investments in history ever, period. Yeah.
You've been bullish for that for a long time.
Like, it's one of the only companies that can produce, that has produced 100% returns year on year. That's actually insane. So yeah, let's go to the next one. I hope everyone's getting a bit of a context for where we are in the world. And so what I want you to do is we're going to make this a bit interactive. What we're going to do is we're going to play a game, and it's called Rise of an Empire. And if you think China, I want you to type 1, or C, or China. If you think 2, type 2, which will be America. Just type 2, USA, or U. So who do we feel, out of everyone that's still with us, who do we feel is the current leader when it comes to education? Is it China or is it the USA? Type in chat. Overwhelming result for China. Okay, let's go to the next one. Who do we feel is the leader when it comes to innovation? Is it China or the USA? Type in chat. So we've got 1 for China. Okay. Next is, who do we feel is in the lead when it comes to technology? USA or China? Type in chat which one you think. Okay. Next one is, who do we think is the leader in economic output, aka the share of world trade? America or China? Okay. Next is, who do we think has the most advanced and efficient military? USA or China? Type in chat. Ooh, USA. Okay. Okay. Very interesting. When it comes to sheer manpower, though, they don't. Next is in terms of the financial markets. Who do we think is a leader in the financial markets, the USA or China? Yep, I would agree. USA, the majority vote. So we can see the USA is clinging on to two of these factors out of most. Next is, who do we think has the most sustainable and powerful currency, the USA or China? Oh, Zishan says China. Interesting. Okay. It's all open to opinions. But these are the measures for how to detect who is the rising empire and who is the failing empire. So if we just put the UK into any of these, you can kind of see. So where is the UK? Okay, this will make it a bit more funny. So what I want you to do, in terms of a scale of 1 to 10, 1 being terrible, 10 being amazing, I want you to put where you think the education of the UK is. 10 being amazing, 1 being okay. 6, okay. 4, 5, 3. Might as well do a 2. Someone do a 2. 2. 1. So in terms of innovation, where do we think the UK is on a scale of 1 to 10? Six, 2, 6, 3, 1. Next, technology. That's kind of innovation anyway. But let's go economic output and share of world trade. How much do we think that the UK contributes to world trade on a scale of 1 to 10? 6. Okay. And it's important to do it like this because it gives you perspective of what other people are thinking and feeling. And in that way, you can kind of range it. Okay. Next is the UK when it comes to military presence and efficiency on a scale of 1 to 10. 7. Okay. Interesting. Okay. Next is the UK when it comes to the financial markets. So the shitsy, the footsie. 5. Wow, you guys are too generous. 5, Wow. Wow. Okay, you guys. Yeah, Deco, I'm with you, bro. It's like a 1. It's like a -1. Just to let people know, the footsie has done less than a 10% return on investment over the last 5 years. Just to let you know. Probably not even done 2%. Just to let you know. Meanwhile, yeah, I'm not going to get into it because I'm always shitting on the footsie, so I won't. And then currency, the power of the pound. That's still got a bit of power in it. A little bit, but not much left. But yeah, I hope that's given context to the rise of an empire. So this is the warning signs that you can tell that problems are happening. Is when, because everyone's complaining about the rich get richer and the poor getting poorer, what happens is the government decides to increase the taxes on the wealthy. But when you do that, The wealthy just leave. They just leave, and guess what they do? They take their assets and they take their commodities with them. Now, because they can do that digitally now, it's just 10 times easier. Bye. Just like this gentleman getting on the jet is exactly what they do. They just call up, make a phone. They don't even make a phone call anymore. They swipe right and get their money moved. Now, when that happens, it means that there's less credit for the banks. Why? Because the banks get their credit from the investors that have put their money into the banks. Now, when there's less credit, companies that are invested in for companies, banks, and big money only invest in companies based on their cash flow, not on the expectations of what they can potentially return. This is the shift that we need to look for and that we're seeing right now in the markets. Companies that are expected to do well are getting destroyed, like Netflix. But companies with great cash flow are doing well, like Tesla, like Apple. So let me just quickly. I just did a piece about that for class. Oh wow, amazing! To join the trading Discord, Ninja will put a link in the chat.
Yeah, I'll just message Toby personally.
Perfect. So one of the things that you can see when it comes to this is people, the rich, start leaving for places where they feel more comfortable to build out businesses, where they feel there's more opportunity, and then obviously where there's less tax. So we can see that's happening in America, people leaving LA to move to Texas, like Elon Musk, like Joe Rogan, like loads of celebrities. In the UK, we can see people leaving London to go to Manchester. And globally, we can see people leaving the USA and London to go to Dubai and Singapore. Is there any other countries that people would say that people are leaving the UK or America to go to? Type in chat. Puerto Rico. Interesting. Okay, cool. So this is again notes from Ray Dalio. Diversified means non-correlated. He also suggests that we spend the same but make more. So cash flow in these situations is essential, absolutely essential. So whatever you're doing, do more of. Do more hours, get another job, start a business, whatever you can do to create more cash flow is what you need to do. Think of everything in terms of buying power, not the number of dollars. That is the key shift that Ray Dalio suggests that people make. So people pay too much attention in what this is him talking about crypto. He says that people pay too much attention to one asset and forget crypto, like gold, most of the time isn't a productivity based asset. So technically, most of it isn't good for the economy. Now, what he means by that is people invest in stocks based on the productivity that they're having from the earnings reports, and so that the company can go and do better and employ more people and so on and so forth. Whereas crypto, the majority of the time, isn't really based on the productivity of the crypto, which I thought was a very, very good point. So like gold, and it's not private and can be controlled by governments. So if Ray Dalio is telling you it's not private and it can be controlled by governments, it is. So he also says most people buy high, sell low, and don't use similar high quality info sources, which we know because most people get their investing research from YouTube, Twitter, and the likes. I'm guilty. What can I say? But we do also read earnings reports here at Blockchain Sensei and reports like the Citibank report, which will be being distributed as an NFT. We're just trying to figure out what platform I'm going to do it on. But every single report that I read from now on is going to be released as an NFT with my notes attached to it, because I think it's worth several hundred or several £1,000 if you read it and then research every single bit that I highlight in the reports. So the governments, we've got to talk about these guys and what they do. as we know. They look exactly great actor, great gift. This so I think it's quite accurate. Is what needs to happen is just like an individual who needs to be healthy in terms of their body, governments need to do the same thing, and they need to be running a healthy country. And what is a healthy country? It's a country that is earning more than they're spending and is investing in infrastructure and in the community and in the people. Now, both, just like if somebody becomes overweight, they have to be accountable and responsible for that. Yes, there might be some external factors, but at the end of the day, if you want to change, you have to be responsible and accountable. Unfortunately, some politicians aren't quite responsible, Boris, and most definitely are not accountable, Boris. And the same could be said in America. So what happens is you have less money spent on infrastructure and education, and this increases the belief that nobody cares, and it decreases productivity. If you spend money on infrastructure, you have better productivity, which means you have better income, which means you have better health, because obviously better income equals better health, and therefore you have a better economy. It's a no-brainer. But when politicians don't want to spend money on that and they want to spend it on themselves, like giving themselves a pay rise, but not giving the NHS a pay rise, which is part of the infrastructure, then you've got problems. So here's some more of the maths. So we're coming up to the end now. So here's some of the maths, but I've broken it all down for you. So the solution, unfortunately, to this problem is that people work more hours or for less pay temporarily for about a year to 2 years whilst inflation continues and whilst education and financial literacy improves. But we can kind of see in the UK that is never going to happen because they don't even mention financial literacy, and there is no way you're going to get people in the UK to work more hours or for less pay whilst inflation is increasing. It's not going to happen. So there's this formula, and it's M plus C plus I equals S and F slash R. What does it mean? Money and credit plus income equals spending. So when people have more money and more credit and more income, they spend more. And then when they spend more, they get more credit. And when they get more credit, they spend more. Now, what are they spending it on? They're spending on either absolute crap, like they did during lockdown, or they're spending it on assets. So you can see during lockdown when people had free money, what happened to the markets? They started inflating because people had more free money than they had before. So this creates this cycle. However, the problem is most of the things that people have spent their money on are assets that are overvalued. So stocks or crypto that are overvalued, or products that are made in China. So it's a bit of a problem. So what the central bank has to do is they are ending up in a situation where they're in a boom, the interest rates go up and the inflation goes down. And in a bust, the interest rates go down and inflation goes up. Now, the reason that they do this is because if the interest rates are down, people are more likely to buy. If the interest rates are up, people are likely to buy the bonds in bulk, because remember, people buying bonds in the billions, and central banks need people to do that so that they're making money, so that they've got money to lend out to people. But in a bust, what happens is the interest rates go down and the inflation goes up. So the inflation goes up, but the interest rates go down, so people are more likely to buy things like property. So here's an example. The average house is around 300 to 400K. 3% interest rate, like it was in 2021, would mean that you're paying 1,700 per month in interest. Now that 6% would be 2,400%. 2,400 per month, which we can see is a bit of a difference. Now, I want you to imagine how much of a difference that jump from 3% to 6% on the interest rate is when you've got 10 million or 1 billion. It makes a bit of a difference. Now, in regards to this overvalued assets, let's look at what happened last year. So savings increased by 0% in America. Wages increased by 4%. Inflation increased by 7%. The real estate market increased by 19% because the inflation, the interest rates were down. The NASDAQ increased by 21%. And the S&P, which is made up of things in the NASDAQ, went up by 27%, which is straight away a red flag. How is this, it's got more stocks in it that aren't as quality, gone up 27% in comparison to the more quality thing, which has gone up 21%. Red flag. Plus, then we had the inverted yield curve, which again, go back to previous episodes to find out about what the inverted yield curve is and why it's important. So less productivity means less income. Less income means less credit. Less credit means less jobs. Less jobs means less spending. Less spending means poor earnings reports, which causes the stocks to go down. And then finally, what can you do about it? When it comes to your investing strategy, what you can do is, number one, dollar cost average, which is just ignore what's going on in the world and just invest the same amount every month into the same assets for 10 to 15 years. That's the easiest. You don't have to look at what's going on. You just trust the fact that the markets will sort themselves out like they always have done. Next is you can use the RSI strategy and look for bargains on the RSI. So the RSI is normally 30.
The holy RSI.
The holy RSI. Ninja has his own RSI strategy. Please book in a lesson to learn his RSI strategy. Is very, very effective. I personally look for assets when the RSI is below 25. Ian likes to look for things when the RSI is below 5, which is super rare. But yes, if you do see things with the RSI below 5 and they are top 10 assets, that is crazy. But it's very rare that happens. You want to
just to shout out Toby in the room, who's one of our latest subscribers to the Swing Trade Signal Service. He literally said, I just conversed with him over DMs in the background. He said, "You lot literally are the equivalent of Red Panda, but just in the UK, and you lot are just starting up. I have no doubt in 5 to 10 years the joining fee will be thousands. The joining fee for the game is free."
Now we're always going to keep the game free, but yeah, like eventually, it's never going to be thousands because we always want it to be accessible. There's just going to be tiers of information you can get access to.
Yeah,
that's what it'll be. So this kind of information, we won't be giving out this kind of information in a couple of years. Anyway, but it'll be there. It'll be there. The aim is that our information is timeless. That's what the aim is. So yeah, you want to pay off your debt because that's essential. Because then that gives you puts you in a position where you can get credit to invest into assets. That's the key. So don't risk what you can't afford to lose. I thought that was a no-brainer, but it's important to say it again. And don't use margin. Just don't. In a financial crisis, or when the markets are going down, or if you're worried about the markets going down, don't use margin. It's stupid. Next thing is to decide whether you're a trader or investor, because they are two very, very different things. Unfortunately, people don't know the difference. An investor is someone that's investing into something based on what they believe the company will be able to do over the long term, and they're willing to hold, regardless of how much it goes down, for 5 to 10 years. Now, in terms of a trader, that's someone that's looking to buy low, sell high, and probably can be trading on a weekly basis, a daily basis, or an hourly basis. So you have to really decide which one of those you are. Now, if you want to be both, ideally have separate portfolios. So run 2 plays at the same time, which is to have a portfolio that is just for trading and a portfolio that is just for investing. And you just don't dip into or out of them. You just leave them as they are and grow those portfolios. Next is fear and FOMO. Don't give in to the FOMO of missing out. A quote from Warren Buffett is, when people dumber than you and your neighbors get rich, we take risks, and that's how you get bubbles. That's a quote from Ray Dalio, and I definitely agree with that. So that is pretty much everything. I hope everyone's enjoyed that breakdown. Please go and watch this video. Let me just make sure it's sharing on my screen, because it is a life-changing video.
Yeah, I learned a lot. Thank you.
The Ray Dalio's video, Principles for Dealing with the Changing World Order. Please go and watch that, or cop the book. You'll enjoy it. Cool. So what we'll do is we will open up for questions. Has anybody got any questions? Just raise your hand or unmute your mic far away, or anything they enjoyed from today's session. No, nothing. Okay, I'm just gonna ask people individually then. Oh, Keish.
Yo, bro.
What's good, broski?
Can you hear me? Can you hear me, man?
Yeah.
What's good, man? What do you think is the pathway that we're gonna go in, and the way things are gonna play out from where we are now?
I think we're gonna get a charismatic leader. I think there's gonna be a charismatic leader in the UK. Are we talking about in the UK, the US, or globally?
Globally.
Globally?
I heard something about chemical weapons, and I just hope it's not true.
I think where we're gonna go globally is, I think it's too dangerous for either party to initiate that, because both parties know that both parties haven't got just nuclear weapons, they've got AI weapons. So I think we're already in an AI war where it's just different AIs coming up with strategies against each other. But I think what these AIs are calculating as the damage that they can do, they're thinking, shit, if our enemy can deal that amount of damage that we can deal with them, nobody wants to do anything. So I think it's a lot of puffing up of chests, but everyone just being like, yeah, let's not
this ain't gonna end well.
Yeah, so I think what everyone's doing is trying to come up with human ways of inflicting damage without crossing the line too much. Because really, if Putin wanted to do a Mazai, he could have done it ages ago.
Facts.
If America wanted to go into and back Ukraine, they could have done it ages ago. But this is what I'm saying. It's going to be when China do the same thing to Taiwan, that is when we're going to see, that's going to force America's hand to show if they're really about this life or if they're not. And mainly with the sanctions, because the sanctions won't work on China. And they won't be able to get the rest of the world to copy them on the sanctions with China. Because you can't get the African nations and most of Europe to stop using Chinese products.
Yes, facts. And do you think a cryptocurrency can become a world reserve currency?
Yeah, I think potentially the Ripple might create the company that's most likely is Ripple, and it won't be XRP. That's the unfortunate thing.
It has to be a stable coin.
Yeah, I think it will be Ripple will create a stable coin that will be non-available to the public, which I'm sure they've done already, but it'll just be rolling it out.
So a stable coin that's not built on fiat.
Yeah.
Ooh, that'd be a plot twist. What, maybe like a commodity stable coin, or like its own value system?
I think it will have its own value system. And I think it would be based on productivity in somehow. So it'd be like a coin linked to a country's GDP and productivity.
Sick.
which would just for countries like America would kind of do them over. If it basically took your debt against your GDP, most companies would be fucked. Most countries, I mean, because if you did it like that, that would be like the equivalent of taking a company's debt and liabilities versus their revenue. And we know there's a few companies out there where their revenue looks good, but their debt is shocking. But when it comes to countries, it's even worse. When it comes to countries, it's super hard to find a country that's actually like got more revenue than debt. So it makes sense to create a stable coin based on that, because then you can't unpeg it. And then
that'll make everyone fix up, though.
It would make everyone fix up.
That's why everyone to fix up.
Yeah, of course. Because then everyone makes more money. Because then everyone has to make more money. They've got no choice. If you keep going along this, it has to be pegged to commodities or something like that. It just won't work. And I think if I can come up with this idea, surely someone else has.
I think the gov needs you, man.
They don't want me, bro. They don't want me. They don't want me, bro. They're too wild out here, bro.
Mr. Harding in politics. That's like, is that 2030?
Nah, I would never run in politics ever.
Yeah.
I'd be a puppet master.
I can get you into some politics games, Michael.
What do you say, George?
I can get you into some politics games if you want.
Nah, I'm all good, bro. I'm all good.
You know, we know our home office buddies.
Nah, I'm good, bro. I'm good.
George.
We know all sorts of people.
You know everyone.
I'm gonna pass on the politics side. It's just not for me.
Send in your CV.
Yeah, I'm gonna defo pass on the politics side. But yeah, man, great questions. Roger, because we don't normally have you. What's up, broski?
Hello.
How you doing,
Can you hear me?
Yeah,
not bad. How are you?
All good, man. All good.
Yeah,
how you been?
I thought I'd just log on today, like, see what you guys have been up to, man. Been really busy.
Yeah, man. We're just breaking down. We've been getting these free calls more advanced, to be honest with you. Last session we were doing a bit of Wyckoff. This time we're going through Ray Dalio stuff. So yeah, man.
Nice.
That's where it's going. You got any questions on anything? Anything you're looking at? Anything you're researching? Anything?
No questions. I'm just getting back into it now because I've been out of the game for a couple of months, like just working on a few things. I'm just getting back into it now. So
okay,
you're gonna be seeing me a bit more and more on these things now.
Oh, all good. Like to hear that, bro. Like to hear
Oh
that.
my God!
Yeah.
Yes, Roger.
Yeah.
Roger from last year. We detected.
Yeah.
Where Roger went?
He's doing bits. He's back now, though.
Yeah, I'm back.
So let's see what going. Let's go to.
Bro.
Yes, welcome, man.
Thank you for your time, Roger. Thank you very much. Let's go to Toby, one of our newest students.
Yeah, how you lot doing?
All good, bro. All good, broski. What you saying?
Yeah, no, this is my first webinar.
Oh, mad snap!
Yeah,
Welcome, bro. Now you got a good one, bro. This is a good first one because like there's hardly anyone here, so you get plenty of time to ask questions, and I didn't have to go that fast.
Okay. You know, what I wanted to know is, I think a few weeks ago, you done a video on like the accumulation phase and the reaccumulation phase. And I was just wondering that obviously the market will drop at some point, which it naturally does.
Mm-hmm.
So would you say it's best to wait until it drops completely and then buy, or get into it now? Because there's obviously certain stocks and certain cryptos that have dropped, or would you say it's best to wait until most of it drops?
So with cryptos, they don't move at the same time.
Okay.
With stocks, the majority of them will move at the same time.
Okay.
But cryptos will definitely not move at the same time. With cryptos, we've already seen some of them starting their first leg up. So I think like Zcash, Zilliqa, Can't remember what else. ApeCoin, obviously. Terra, like a lot of crypto is, I'd say about 10% of crypto is uncorrelated to Bitcoin, but majority is, but vast majority. There's a few gems out there that aren't. You just got to find them.
So maybe a better question to ask then would be like, in terms of Bitcoin, obviously a lot of people say that it's going to raise or it's going to go down, but obviously there's going to be a crash anyway. So would you say that Bitcoin will go to like 20,000 or 25 potentially?
Yep, that's my buying price. I'm going to start buying. So we've been publicly out of Bitcoin since, was it October, Ninja?
Yeah, from Halloween.
Okay.
Yeah, so from last October, we've been out of Bitcoin and ETH, just making the gains in other altcoins. And then we're going to be going back into Bitcoin and ETH once they drop about 75% from between 60 and 75% from their all-time highs. Otherwise, I'm not touching it.
Toby, you're a new follower, right? I've just recently started seeing engagement from you, and Toby came from what you've done that video.
Yeah, I've literally been watching you for like probably a month now.
Oh, sick!
Nice, thank you, man. Thank you. Thank you for tapping in.
That's good to hear, man. I'm guessing you're enjoying the content because you wouldn't have made the time to come to one of these.
Yeah, of course, because obviously I understand that like, not a lot of people are going to invest in, and the way the world is going and how in 2030 there's going to be automation in terms of jobs, crypto and stocks and property and all these kind of things, so it's probably the best thing to do.
Yep, 100%. If you ain't got these assets,
yeah,
it's going to be a peak one. It's going to be a peak one, definitely. But yeah, man, thank you. Appreciate you tuning in and coming on the live and contributing. We're going to try and make them as interactive as possible going forward. But yeah, really appreciate that, broski.
No, thank you too.
Next up, Devon, what you saying, broski?
Hello.
Yo, what's good?
I'm doing pretty good. I like the content today. I'm gonna go watch that Ray Dalio thing today. So that was good. I really don't have any questions, but I have been like considering taking a trip to the UK sometime because I've never like been to Europe.
Okay.
Yeah. I mean, that was like my only comment that I had.
Yeah, if you're planning to come to the UK, let us know. We'll try and find a time. We'll try and find events that are on when you're around. Meet up in person. We'll go to some of the events that we're going to together. You can see how we network, how we meet people. Just let us know. We're happy for you to tag along, depending on the level of the event, obviously. But yeah, we're happy for that. That's all cool.
Sure, man. Come up, we're ready for you.
Also, Devon, based on what your project is, have a look into the UAE's vertical farming and hydroponics investment fund. So they're pouring loads of money into hydroponics.
Wait, I missed what it was called.
UAE, United Arab Emirates.
Oh, okay, yeah.
So they're getting pretty big on it. So yeah, look into that.
I mean, that makes sense for like where they are at.
100%. Thank you very much, Devon. Okay, last but not least, man like George Brown, what you saying, broski?
Do you know what? I really hate to have to say this, and it has to get said today. And I hope I never have to say it again because I do believe in them. But for today, fuck Crow. Fuck Crow. Fucking bastards.
Yeah, they did everyone dirty. They did everyone
cutting
dirty.
those cashback rates.
Well, I don't understand it. I can't see the logic behind it. I don't understand why they would do
They
that.
must be in deep shit. They must be getting way less new traffic and stuff than they expected or something from all that marketing, because I don't know how much they've spent on marketing. Like they've spent big bucks marketing, and I don't know if they're like how like is it, did they put that out publicly? Like they don't, do they? How many
I don't think they do. But it just doesn't make sense.
bro, like even like the red one that I've got, I think it's gone down to like it was at 2%, now it's like 0.5.
Yeah,
Oh,
it's
God.
dead.
And then now the price of Crow just dropped, like whatever. Hopefully it'll come back, but like it's a big thing about Crow. It's like one of the main things about it. It's why we love it.
It's identity. That's the whole reason I
I've been
recommend
pushing
it to
1%
anyone.
cashback forever and 2%.
Huh?
I've been pushing the cashback thing forever.
Isn't it? So like it jarred me today because Crow's always been one of the favorites. Like I love using Crow, and I feel like I've been done dirty. It's got to be said.
That's the worst bit. Bare people feel like they've been done dirty.
Definitely. I'm not surprised the price has dropped, but I'm just annoyed that I still got quite a bit in Crow.
Yeah,
quite a bit in Crow.
No,
I had some of the supercharger, which is shit anyway, but like I meant to change it and I just never got around to it.
No, I feel even worse, bro, because we had that news that I told you about, and that was going to happen.
Yeah,
and this was direct from the horse's mouth, and then they stalled on it, and now this has happened, and I'm like, bro.
Wasn't it a marketing thing as well? Like probably like their accounts were like, dude, like we can't do no more marketing. Like we got Matt Damon, like we can't do no more marketing.
Yeah, very annoying. I just don't feel like I can hit them up and be like, yo, what go on here? Give me the inside scoop. I feel like it's a proper auction.
You can't do that. You can't be like, what's going on over here?
Yeah, like what go on for this, bro? Like, well, you can't do that, bro. Like, we did.
No.
Are you trying
Yo,
to?
gang, I've got to get off. Well, it's been an amazing episode.
All right, bless broski.
Bless. Take care.
All right, gang. I'll see you next week. Bizzle.
Bless.